Performant Financial is hoping to raise $153 million in its offering, but this company is very dependent on student debt and the Department of Education. Francis, it sounds like that's kind of a risky thing to ask investors to put money with a company who's really dependent on one customer.
Yes, one red flag I saw was that 83% of the IPO proceeds are going to the equity sponsor Parthenon investors. So this is yet another leveraged buyout. Bailout. The company had a good June quarter, and the revenue is up, but it's as you said, dependent on the Department of Education to collect debts there. They're one of 17 qualified vendors for that. I'm personally kind of leery of any company that's heavily dependent on the federal government because of the politics, because of the, you just never know what they're going to do. So in terms of valuation, if you analyze the June numbers, and they were high, because the Department of Education shoved some stuff into the June quarter from before. It's coming to 18 times earnings. And if you look at asset recovery, that's something like 12 times earnings, and portfolio recovery is like 14 times earnings. So it's a little bit above comparable debt collection companies, but it does have the federal government connection, which I personally think is not a plus.
Then we have Peregrine Semiconductor, this chip maker. Looks like sales have been going up, but unfortunately, margins coming down. So does that concern you?
Yeah, they only made money once in their lifetime. It was 2010, and they've taken about $250 million of VC money, and yes, their sales were up to 46 million for the recent quarter, or the recent 6 months. But the gross margins went from 42% to 34%, which means there's a lot of pricing pressure in their market. So they have a record of losses, lowering gross margins, losing money. I wouldn't buy that one.